For our COBT viewers and listeners, it's Maynard, Mike, and Jeff here with something spectacular. We've got Jim Matheson. He's the CEO of the National Rural Electric Cooperative Association. He's been doing that for a long time now, almost 8 years or so. He's got a great background around energy, around government, and so he's been thinking about many of the issues we're all dealing with quite extensively. But Jim, let me just pause and say we're delighted to have you. Really appreciate you coming on the show.
No, thank you. I think it's always good to have an opportunity to take some time to really talk through these issues, because the energy issues are really important to this country, and they're also complicated. And it takes, I really appreciate your podcast taking the time to do a deeper dive on some of these issues to create greater awareness. I think that's good for all of us.
Well, we love it. And you said it better than I possibly could. Mike, before we jump in with Jim, what would you tell us about the markets today?
Hey, Maynard, I think the key word is choppy. Markets have been choppy here in the last couple of days. A little choppy today, up a little bit today. What I want to really cover is four areas. We're going to talk about, as we always do, bonds. We're going to talk about commodities, talk about the broader market, and we'll talk about energy equities. First, let's talk about bonds. Bond yields have really plunged over the last week. They're at roughly 4.45%. Last week, they peaked out around 4.7%. And the reason the 10-year yield dropped is because last week we had the FOMC meeting. And at that meeting, Chairman Powell pretty much said that the next move is probably going to be a rate cut, not a rate hike. And but they didn't say when that was going to be, what rate cut was going to happen. And so that's probably going to be something that's pushed out towards year end. Anyways, yields moved lower on that. And so with that, markets moved higher as well. As far as commodities go, WTI really took it on the chin last week. We're sitting right now at around $78, $79 a barrel, down about $5 from last week. And the question is why? And I think the reasons are maybe threefold. First off, U.S. crude oil inventories really built last week, so that kind of provided some fuel to the fire. Second, Mideast chaos seems to be at least going sideways. It's really not amping up from here. And third, U.S. crude oil prices, WTI crude oil prices specifically, broke through some really strong technical trading levels, both the 50 and the 200-day moving average. It's really sitting on a 100-day moving average right around 78.50 a share, a barrel. So that's something to keep an eye on. If we get some really poor stats this week and we push through the $78 barrel range, there could be some downside from here. The other thing I want to say on crude oil is, a lot of talk now about OPEC. What is OPEC going to be doing at their June 1st OPEC meeting? I think there were some thoughts maybe a couple of weeks back, 4 or 5 weeks back, that they might actually put barrels in the market because the market in the second half looks strong. We think the market in the second half still looks strong, but there is no way they're putting barrels in the market at 78 or a sub $80 type WTI. The other thing we want to talk about is natural gas. As you all know, as natural gas got down to around $1.50 an M, it's now at about $2.20 an M, and so it makes it look like gas prices really went up dramatically here, and really it has gone up a little bit, but a lot of the move is just because the contract expiry, the contango, the monthly roll in the contract has gone to a higher price, and so it really hasn't been the market getting significantly better. Two things we'd say on that. One, we've talked about the U.S. storage surplus. It's huge. It's around 630 BCF. And so that's still going to be a problem. Now, the positive thing is that U.S. lower 48 natural gas production continues to decline. We've talked about this repeatedly over the last 4 or 5 weeks. Now it's averaging less than 99 BCF a day. And so, we have some curtailments out there, but we think it's going to continue to fall. And so that's a really good thing. And so what we're looking now is hopefully we're going to have summer bail us out, summer heat bail us out. But things are looking better from that standpoint. As far as broader markets go, we've been talking about in the last couple of weeks where, market's been under pressure. Volatility is really high. The market got oversold. And, given what rates have done over the last week and a half or so, the market has really spiked back. And so volatility is back towards previous lows. And the markets, while not oversold, they're getting back to oversold levels. So what I'd say with the broader markets is, a lot of the earnings have been reported. A lot of the Magnificent Seven earnings have been reported. So the market's going to be looking for data to really trade on here over the next couple of weeks. And we don't see a lot of economic data, so it's probably going to be sort of Mideast chaos or something like that drives markets. The last thing we'd say is on the energy sector. Energy sector, for all intent, 95% of companies have already reported Q1 results. This week's going to be heavy. E&P, small cap E&Ps, small cap servers, refiners, a couple oil majors, and really electric utility and IPPs. So we're pretty much done there. And, over the next week, we'll probably kind of sit back, decipher and determine what were the main themes, and we'll go ahead and get them out to our clients here over the next, week or two. But anyways, Maynard, that's what markets are doing today. That's what markets have been doing over the last week or so. So we'll hand it back to you.
Awesome. Well, Jim, again, welcome. And the timing of this is either good or bad, I guess, how you might describe it. I mentioned to you as we've been getting to know each other, power prices, power reliability, power systems, the implications of all that. That's been a big topic for us over the last 6, 12, 18 months for sure. But more recently, there was a ruling in Washington about coal and about natural gas plants in particular. So that provides us some real, focused discussion we can have about that. As a lead-in, would you mind telling our audience a little bit about your association? Because you are providing the association and the co-ops that are in it are providing power to a huge part of America. And let me just let you introduce the association.
Sure, yeah, have you. The National Rural Electric Cooperative Association. We're the national association. There are 900 electric cooperatives in 48 states. We serve 56% of all of the land mass in America. So we serve a lot of the wide open spaces, and we serve a total of 42 million people. So about 1 in 8 Americans receive power from an electric cooperative. Cooperative is a little different from the rest of the utility sector, where the cooperative model means you're owned by the members you serve. So each consumer that receives electricity from the co-op, they're an owner of that co-op, and they're involved in the governance of that co-op. They elect the board of directors. We're non-for-profit. Any excess revenues go back to the consumers in what is like a rebate to them. That's our business model. So we're set up with 100% consumer focus, our members are, in everything they do. It's all about that member at the end of the line receiving electricity. We've been around since the 1930s, when Roosevelt first looked for legislation to electrify rural America. Rural's in our name, but quite frankly, the areas that were rural in the 1930s, a lot of them are now suburbs today. So we serve a wide range of consumers, from very remote rural locations to pretty dense suburbs and around, like, say, Cobb County area in Atlanta, or all around Austin, Texas. So it's a nice overview of all types of service territories in this country that our members serve.
So Jim, you hit on it, and it was something we didn't have a full appreciation of, but this co-op structure, it creates this really unique situation where the person or the people designing the system, paying for the system, making choices around the system, are the same people paying the costs on the back end and using the service. So you get this alignment between producer and consumer, I guess, and there's no governmental, other than the legislation that makes these co-ops possible. There's no governmental body other than regulation. There's no governmental decision maker that's at the table pushing choices one way or the other. Is that
Well, that's fair to say, and even also relative to the business model. Not that the alternative is better or worse, but we don't have shareholders like the investor-owned utilities. Those are publicly traded. They have shareholders on Wall Street. So there's a shareholder interest and a consumer interest, and they balance both of those. We're 100% consumer interest because that's who our owners are. So that creates, I think, a good focus for an industry that for years, the electric industry is pretty stable and didn't change much, but there's a lot going on in electricity business now that are affecting people right at that consumer level. And so we feel like we've got a nice alignment for the dynamic circumstance we're in right now, where technology and market forces are really giving consumers more choices for electricity than they've ever had.
So, Jim, when you think about all the changes that are happening right now, and there's changes in terms of demand, there's growth, there's the digital world / AI data centers, there's this pickup in electric demand. There's an electrification generally trend going on where we want, electric motors and electric things don't have as many emissions. They don't have any emissions where they're producing the power. But there's an electrification trend. And then there's, of course, a regulatory trend, which is pushing flavors in and out of favor. So there is so much changing. How does a typical co-op, like at the board, if you will, I know that you can't grossly overgeneralize, but how does a co-op at the board talk about, think about, examine these issues, have enough information? I mean, they're planning for their jurisdiction, but it sounds like a really complicated thing to manage at the board.
No question it is. And one thing I'd say about the way I mentioned there are roughly 900 co-ops across the country. We have 63 of them that are the larger, we call them generation and transmission cooperatives. They're the ones that own the generating assets. They own the high voltage transmission lines, and they deliver the power to the other 840 cooperatives. They're more in what we call the distribution business. That's where you're delivering the electricity to each home or business or farm. And so the decisions about power supply and the dynamics that you're mentioning in terms of regulatory overreach and increasing demand, those 60 or so, which are larger entities, really are the ones at the forefront of trying to figure that out. They're governed by those distribution cooperative members who buy power from them. They're owned by the same. It's that cooperative model. So the distribution cooperatives are the governing entity for the generation transmission cooperative. So that's a mouthful I just said to you, but it's a group effort to try to look at these issues. So we don't have all 900 doing it on their own. They're under these umbrellas of these sort of regional or statewide type generation and transmission cooperatives, and that's where these issues are addressed. Now, as the National Association, we kind of are this convening entity that assists in understanding these issues in terms of sharing ideas across different cooperatives in the country, and it helps give more of a national perspective to folks that are trying to deal with stuff that's in their region. And I should say that each region's different. Different parts of the country have different resource mixes. An obvious example in the Pacific Northwest, all the hydroelectric resources on the Bonneville Power Administration system, that's very different from other parts of the country where it may be more nuclear or coal or gas. So even with that difference across the country, we all compare notes about the value of always available generation in terms of meeting this increasing demand that you mentioned in your question.
So Jim, it's unfair, but I'll try it anyway. These co-ops, because we mentioned they don't have shareholders like Wall Street type shareholders that they're thinking we need to manage to their tastes or desires. They have regulation, but they don't have government decision makers in the room saying we got to do this or that. So given that they're sort of deciding in their own world what they would like to have, how would you characterize how they approach building a power system? Like I assume they come in and say, hey, we only have so much money. We got to make sure the thing runs all the time. Hey, we have certain kind of weather in our world. And then, we have, like in the case of Washington State, we might have the ability to use a dam, and that's always awesome if you have that option. But can you talk about the philosophical approach a co-op takes to, okay, we're going to have a power system. How do we build this thing?
Well, at its core, it's a basic value that may sound obvious, but it is at the core is we're all about providing reliable and affordable power. Pure and simple. That's the mission of every cooperative across this country. And so reliability means the lights stay on during peak events. We try to manage to that, and we want to keep it affordable because affordability matters. Our consumers are our owners, and I might add as a tangent, we serve 92% of all the persistent poverty counties in America. Electric co-ops do, so affordability really matters for our membership. But that's the foundation in which we look at this. Now, I do want to say, while we're not directly involved with government entities, you said, in some states, our electric cooperatives are regulated by the State Public Utility Commission, and in other states, they're not. So there's kind of a different set of circumstances across the country. We're also subject to the federal rules in terms of interstate transmission and independent system operators that run transmission grids. So we're interconnected with the overall electric grid in this country in a way that various decisions made in the policy world do have an
Yeah.
impact on our operations
Sure.
and on our decision making. But at the end of the day, our cooperatives are making decisions about how to meet that reliable and affordable mission by how much do we build generation, how much do we contract for it and buy it from another provider, because there's a mix here. We don't own generation for everything we deliver to our members. Some of it we have contracts and we purchase power from others as well. And so that's the decision that each board of a cooperative is dealing with, is what's the right balance, what's the right mix to manage risk with reliability, with affordability. And those are the decisions the electric cooperative boards consider every day on behalf of their consumers.
So reliability, we talk a lot about it. Do you have any measure or stat or way to quantify how, in general, the reliability of U.S. electricity has been changing? Or are there any things you watch? If someone says, how reliable are your systems, or how reliable are all of the U.S. systems? What are the stats or figures that you use to talk about that?
Well, there's a couple of ways I'd frame that. First of all, there's a remarkable track record, if you go back over the last several decades, of how well the grid has performed in the United States of America compared to the rest of the world. It's been so good that I think everyone takes it for granted that every time they flip the switch, they have no question if the lights are going to go on or not. So we've been blessed by tremendous performance over many decades for a remarkable system in this country. My measure where I see where it's a greater threat is really looking at the analysis of what's called the North American Reliability Corporation, or NRECA is the acronym. That's an entity that was set up a couple of decades ago to evaluate and look at reliability of our grid, from whether it's supply and demand, whether it's cyber attack, whether it's market changes, whatever it is. This is this independent third-party entity that evaluates the risks to our grid. And every year they publish 2 seasonal reports going into summer and winter for the next year. And then they also publish longer term risk assessments. And the trend on those reports over the last several years is that our risk of having less than adequate reliability, that risk has been growing every year. And this is not theoretical. Just December of 2022, we had a cold snap hit. And 9 states in the Mid-Atlantic region had rolling blackouts because there just wasn't enough power to meet the demand. The year before was the storm in Texas, where we had some horrible circumstances where lives were lost, where the grid was not able to stay up during that extreme weather event. And so to the extent that this entity, NRECA, is every year saying the risk is getting worse, the risk is getting worse, that's my measure for reliabilities. And just to put a finer point on that, their most recent report said that there are 19 states, basically right through the middle of the country, from Montana down to Louisiana, that are at real risk of outages, not during extreme weather events, but just during normal peak events, peak temperature in the winter, peak temperature in the summer, for peak use of electricity, that is, 19 states. So this is a concern about the fact that demand is skyrocketing in this country, supply is not keeping up, and our margins to make that are shrinking all the time. So that's the way I view this in terms of concerns about reliability. Is I've seen it happen in terms of those 2 blackouts I mentioned. I've seen these reports coming out that show that our margins are shrinking every year. And I see people projecting out in the future that there's real concern if we can maintain enough adequate supply to keep the lights on.
And Jim, I think we'll end up spending like half the time on reliability. So I was going to, kind of ask 2 questions around just kind of further level setting us, around your constituency. One, you talked about, it's been great for us over the last couple of years. We've gotten to work closely with a number of other co-ops, or a number of co-ops, and it's just been enlightening how they think about things with that cost and reliability mindset. But it doesn't have to be at odds with emissions reduction. So the first question would be just in and around what you've seen in aggregate in terms of emissions and impact of the changing mix. And the second question is just some color around what the generation mix trends have been for your constituency. Sure. When CERAWeek was here just a couple months ago, and I was able to sit with one of your members, and they talked about a peaking gas plant that, I'll screw the numbers up, but in 2019 ran something like 7 days out of the year, and then last year it was 200 and something days. So I guess the 2 questions would be around just what you've seen in terms of emission trends and what you've seen in terms of generation mix trends within your footprint.
Sure. You will see where, in many ways, electric cooperatives have tracked what the national average has been in terms of the source of generation and emissions for the power we deliver to our end use consumers. And the way I frame it that way, as I mentioned earlier, we own some generation and we contract for other generation that we deliver. Up until Congress changed legislation last year, we had no incentive in the nonprofit world to own a solar or wind farm because we couldn't use the tax credits. So almost all the renewable energy that we've been delivering to our end consumers isn't owned by electric cooperatives. So it's not part of the generation mix that's specifically owned by co-ops. But if you look at the generation, that broader definition of what we deliver to our consumers, we're right in line. We're roughly 62, 63% or between coal and gas. That which is not too far off from, I think, what the country's average is as well. After that, we've got nuclear, hydro, renewable. Those are all part of our mix as well. So I think we track pretty well with what the national average has been. We've seen overall carbon emissions, our footprint go down over the last decade or two. That's consistent again with what's going on nationally. But let me offer this as the interesting thought. I feel like a lot of the conversation about emissions reductions gets characterized in this binary all or none zero sum conversation, which doesn't reflect reality. And the fact of the matter is, as well, the Biden administration wants the electric sector to get down to zero emissions by 2035. That's just not possible. It will result in huge impacts on reliability, but that doesn't mean the electric sector is not a meaningful contributor to emissions reductions in two ways. The first is what we just talked about. The electric sector's carbon footprint has been decreasing over time, but the other is the electrification of the rest of our economy is also contributing to significant carbon reduction and will going forward. But you've got to have a reliable grid to make that happen. And part of a reliable grid, and maybe I'm getting away from your question a little, but I got to go with this. Part of that reliable grid is having power that's always available. So you've got to have a certain amount of generation or resources on the grid that are always available. Wind and solar are an important part of a portfolio. They can't be the whole portfolio because they're not available 24/7. And so that's really the conversation I think we need to be having more in this country. It's let's get out of this all or none, 0 or 100% type conversation. Let's talk about how we reasonably and prudently keep the lights on.
So, Jim, one clarification, because you were mentioning it before, the percentage risk of an outage is going up, according to NERC's assessments, and the margin you mentioned is going down. I think a lot of people, when they hear margin, they think financial margin, but you're talking about the margin for error. In the system. The systems are more complicated to operate. Do you just want to elaborate on that?
Well, and in the simplest terms for the electric sector, your margin is I got this much generation and I've got this much that I think is my peak demand of electricity, and that hopefully the amount of generation you have is more than the total amount you need to use, and that difference is your margin. And there's a long history in the utility sector where people, particularly on the regulated side, state public utility commissions have said, let's keep a margin of 10%, 12%, 15%, whatever it is. Those margins are shrinking in this country because demand is exploding in this country right now for electricity. And we're not building new power plants very fast. It's really hard to build anything in this country right now. So that's really where I was going with the margin is the amount of excess generation over the peak demand. That margin is shrinking.
So Jim, we just touch on cost, because it was interesting. You said your systems in total in their generation mix, generally speaking, look pretty similar to the rest of the country. What about your systems in total, how they look from a cost standpoint compared to the rest of the country? Or what would you say about cost, yours and the rest of the country? Just talk to us about that.
It's a great question without a complete answer, because every part of the country is different. Regionally, there's different prices. And also, to the extent that we represent the rural areas of this country, which are the least populated, most expensive, hardest to serve areas in America, it's the delivered cost. It's not just the cost of the electrons and generating them. It's the cost of having the distribution lines to run all those miles through all those rural areas. So in that sense, our costs in certain circumstances may look more expensive than others. But in other cases, I think our costs are better than their neighboring utilities. So it's kind of I'm not avoiding your question, but it's kind of a mixed bag in terms of an answer
Yeah.
because it's not really apples to apples based on the remote areas that we serve and the costs associated with delivering to the end of the line.
Well, and I probably brought into that a certain expectation, which is that if a co-op does a system and a non-co-op does a system in the exact same area under the exact same circumstances, my assumption is the co-op is going to deliver cheaper power.
Well, we have no profit motive. We don't have shareholder return. It's strictly all about the consumer at the end of the line. So all other things being equal, yes, you're correct. I don't know that anyone would beat our price.
Jim, let's go back to what we mentioned up front. So we've painted a picture here of the country. You mentioned it. We're not good at building things anymore. It just takes longer to do everything. So that means even if power demand was growing at its usual pace, we would be falling behind, just right there. Now we've added in power growth.
Yeah.
And so that's making us fall behind even more. And then I think what we have, you tell me, I think we have systems which do not work together and are not as resilient as they were previously. I think our systems have gotten more complicated because you have more intermittent resources, you have more flavors working together, that there can be a problem. And then the last thing, and please take issue with any of this, but the last thing is, now we are pulling existing resource off the system, or we're pushing it off. And this is really this ruling that's come about coal and natural gas. But take issue with any of those bullet points, and then let's talk in particular
Sure.
about the last one.
You set it up well. First of all, demand, which, for the last decade or so hasn't been growing at all, suddenly it's taken off. We are using more and more electricity in this country. It's driven by a number of factors. One of them are data centers, which is basically cloud computing. It's using more and more electricity. Artificial intelligence puts that on steroids in terms of electric demand. So that's creating demand. We mentioned earlier electrification of our economy, whether it's electric vehicles, electric heat pumps, we're using more electricity there. We're onshoring more manufacturing that's using more electricity. These chip manufacturing plants are substantial. I got to tell you, specifically to industrial energy demand, it was flat for the last 30 years. Now it's growing in this country. And by the way, that's good news, right? It's good news that our economy is growing in that sense, but there's all kinds of pressures on demand. In fact, most recent survey prediction I saw said in the next 5 years, we're going to have to add 38,000 megawatts. What does that mean? That's the entire state of California. Their total load today, we've got to add another California to our grid in the next 5 years. So demand is growing. Secondly, as you mentioned, we're not only not keeping up with building new power plants, we're shutting them down. And we already have been. Yeah, there's this new rule we want to talk about now that just came in from the EPA, but we've already been shutting down power plants before the end of their useful life based on public policy considerations. And so at the time demand's growing, we're actually reducing supply of the always available, or in the energy industry, they're called dispatchable power plants that are always available. We're reducing that in our resource mix. Yes, we're adding a good amount of intermittent power, which is wind and solar. And again, that has an important role in the portfolio of what we're doing, but it's not keeping up. It's really hard to get a permit to build anything in this country, be it a wind farm, solar plant, an electric transmission line, which really matters a lot, even a substation, electrical substation. So those are the challenges with supply being either we're taking things offline or it's hard to build new, demand's booming. And then let me address your other question about the ability of us to be resilient and how we connect with each other. One of the key factors we need to take on as a country, and by the way, the electric sector is working hard to build this resilience. I don't want to act like this is all that we aren't addressing this. But one of the thoughts to really build resilience and reliability in this country is we need a lot more electric transmission so we can move power over larger regions of the country. So when these extreme weather events happen in one part of the country, we can get power from someplace else. That is part of the solution, by the way. There's not one factor here, but it's really, really hard to build a new high voltage electric transmission line in this country. It's just really hard to get the permits. It's really hard to get the approvals. It takes I don't know, 10, 15, 20 years to get going on that. These are not decisions you can make and implement in real short time frame. These are long duration planning processes to get them done. All of those factors are creating this reliability risk that we've been talking about, in my opinion. It's all these factors coming together. So what do you do? Because I just said, gosh, these are all tough problems, and we don't have, it takes time to address them. Well, first of all, it's the old saying I always use: if you find yourself in a hole, the first step is stop digging deeper. Let's stop shutting down power plants before their useful life. Let's not make the problem worse. And then let's take a look at if there's a way we can be thoughtful about responsibly adding to the infrastructure of this country in a way to better deliver electricity. And I'm going to throw one more in. I know this is a long answer, but part of that is we got to build more natural gas pipelines in this country as well, because that's a critical part, a critical fuel source for electricity production in this country. And there are certain regions and certain parts of this country where we're really constrained in terms of gas pipeline capacity to meet the needs of electric demand, particularly in the winter, when there's a lot of demand for natural gas to heat homes and buildings, and it's super cold, so you got a high electric demand too. That's where you had that outage in the Mid-Atlantic states I mentioned in December of 2022. There just wasn't enough gas in the pipeline to run the power plants. And so that's the type of conversation we need to be having about how we address this reliability concern that I'm raising and others are raising. Is there's a lot of different factors, a lot of different elements to it. Let's be thoughtful and smart about it, and we can take this on.
So Jim, I mean, you understand Washington better than the rest of us who aren't there. When the EPA takes a ruling like this and says, and you should explain the ruling, but basically it's natural gas plants and coal plants need to have a plan in place by, I think, 2032 to eliminate 90% of their emissions. And if they can't do that, then they need to shut down by a number of years later. The EPA, when they make this kind of ruling, as you know, they're doing so with their vantage point. Is there an opportunity, and maybe that's the comment period we're in now, is there a opportunity for the president or for the Congress to come over the top and say, that's nice, we're not doing that because we have these reliability concerns? Like, what's the planning apparatus that's going to make this better?
Well, yeah, you're referring to what's often described as the greenhouse gas rule that EPA finalized last week. So the comment period is over. This is done. We filed comments. Lots of people filed comments. We think the EPA has completely overstepped its authority. We think this is unlawful based on its authority given to it by Congress through the Clean Air Act, for a couple of basic reasons. And the most basic is, according to the Clean Air Act, you cannot mandate technologies that are not commercially viable and available. And we think that's exactly what this rule has done. They're saying for natural gas plants and coal plants, you have to deploy carbon capture and sequestration, or you got to shut down. And that technology, while we're hopeful and a lot of work's gone into trying to make it work, that technology is not commercially viable today. The most advanced carbon capture effort going on in America today is from one of my members, Minn Kota Electric in North Dakota. They're building a carbon capture plant at their coal plant. It's just starting up. They haven't constructed it yet. But even they will tell you, we don't know if we can meet the standard once it's built, because there's not one of these in existence at commercial scale in America. And yet EPA is mandating everyone has to do it. So we're pretty sure that they've overstepped their boundaries. We don't think this is reasonable. And that's the status where this rule is right now, is it's final. The only way it stops now is through the courts. I suppose Congress could come in and pass legislation to do something different. But in case you hadn't noticed, Congress has trouble getting together and agreeing on anything these days. So that's a limited opportunity in the short term, at least. But that's where this rule has fallen in terms of how it's structured. I don't think it's the right way to make public policy, personally. I think that the legislative process is the appropriate way to do it. But this is something that's caused great concern for our members in terms of reliability. And I'll tell you this, I don't think there's any evidence that the EPA ever thought about impacts on grid reliability when they came up with this mandate. This is all about a broader agenda to go zero carbon emissions in the electric sector by 2035, and that comes from the White House. And it's a whole of government approach to do it. Look, you can agree or disagree with that as a goal, but at the end of the day, for those of us who are responsible to keep the lights on every day, we're the ones waving the flag saying, hey, there's a more nuanced and complex discussion to have here than all or none. And if you pursue this where your focusing is to go down to 0 by 2035, we don't think we can keep the lights on.
So Jim, I guess there's two ways to think of this. One is this is a rule that, sort of damn the torpedoes. We're going to do this and America will figure out a way, or we'll do something else type rule, but we're going to force it. Or it's a rule going in where it's just another one of these targets where there's no way this is happening. And we're going to pretend that this is possible for a while. And then in 2 or 3 years, somebody's going to look up and say, oh, remember that rule about 2032? It's now 2042, or it's totally changed. Like, is this a real rule, or is this just kind of like an objective that we all know with 90% certainty you'll have to modify later?
As of today, this is the law of the land. Unless it's changed through court action or legislation, this is the law of the land. This is real. And we're concerned because you're playing with something that's pretty important, and that is the reliability of our electric grid, which is such a central component of our day-to-day lives. And so that's how serious this is. Now, look, as I said earlier, I think there's a real solid argument that they've overstepped their authority. I think there's going to be an opportunity by some entity or another. There's going to be I assume there'll be some legal challenge to this, and I hope it gets addressed in that way. Because absent that happening, this is the law. And by the way, even if we change it a few years from now, when you're in an industry like the electric sector, where you're making these hugely capital intensive investments and having to make decisions that have years of planning to get implemented, it's really tough on any industry, including this one in this case, to keep having policies get jerked around every few years in one direction or another. It's very difficult to make good decisions when we have such a long-term view on the way we look at our decisions in terms of the assets we invest in and the planning that we make. So even if we say, oh, gee, after 3 or 4 years, they figure out it doesn't work, they can change it, that puts the electric sector in an extremely awkward position to say, oh, maybe it'll go away or maybe it won't. You have to assume that you have to prepare for if it stays in place. So that's actually not, that doesn't provide a lot of comfort to people in the electric sector. I guess that's how I'd put that.
Has anyone, Jim, estimated, let's say that this, under some ambitious assumptions, that that we could do this, and you spent all this money and you implemented it. I know it would be hard to estimate, but has anybody come up with what it would cost to do this and what it would mean for the cost of power? I'm saying if it was possible.
I don't have a good number for you. I've seen it. I've seen an interview by someone at the EPA claiming it's going to lower costs. If you believe that, I got some swampland in Florida to sell you. But I have not seen a good estimate. Other than I will say this: if you are asked to shut down assets before the end of their useful life, all those assets have financing behind them of debt. That debt doesn't go away. You still got to pay the debt on that, plus whatever new utilities assets have to be built, you're going to increase debt on there. To me, that's an obvious argument. The prices are going to go up because you're carrying double debt load, if you will. The assets you shut down for their useful life and new assets you have to build. I don't see how that brings costs down. I think that brings costs up.
Do you also find it interesting that if you are pushing a bunch of new regulations onto coal, and if you're thinking broadly about the grid and the system and costs and reliability, it seems like someone might make the suggestion, okay, if you're going to push on coal, you better make it even easier on gas, because that logically, that's the only way you're going to manage through is if you can replace coal with gas. But this rule, ironically, or however you describe it, it's tough on both. Yeah. Does it surprise you that we're trying to be tough on both at the same time?
Based on the whole of government approach to have the utility sector be zero carbon emissions by 2035 coming from the White House, I'm not surprised, actually. But you are correct in stating that this rule, in its draft form, it went after all coal and all gas. In the final version of this rule, it gives a little bit of a break for gas plants that are already built today, existing plants. but it doesn't give any break for anything you got to build in the future. And with all these data centers coming on, we got to build more gas. So it is not just a coal specific rule. This is coal and gas. And by the way, even though the EPA took out what was in their draft about existing gas plants, they said we're going to come up with a rule for them separately from this. We'll announce it sometime this fall. So even those plants are not away from risk. It's just a different rule that is going to be proposed by EPA for that. So again, as I said earlier, what we value about it's not necessarily the fuel source; it's the always available nature of the generation. So it could be nuclear, it could be coal, it could be gas, it could be hydroelectric dams. Wherever you are in the country, you have different resources that provide this always available feature to them, if you will, in terms of the quality of the power generation. That's really what drives the reliability conversation for all of my members. And I think I said it earlier, my members are all over the country and they're all in these different situations, but they all agree on one thing. You got to have always available generation to meet our reliability requirements and keep the lights on.
And Jim, you all and NERC and others have had, pretty consistent reliability, mantra that you talked vocally about. The aftermath of this latest EPA rule, it seemed like, some of the, publicly traded electric generators, started speaking a little more vocally about the reliability and this intended impact. Do you feel like that reliability kind of message is becoming more aligned amongst the entirety of the electric generation providers, or is it still pretty disparate?
I feel like there is a movement towards greater alignment across the whole sector. Look, there's no question the electric cooperatives have been at the tip of the spear on this issue for a while. And the rest of the folks in the electric sector have kind of acknowledged it in some ways, but not been as aggressive as us. But I think as these surveys come out and these estimates for this massive increase in demand that we're seeing in this country, I mean, you're getting a lot of utilities that just from 1 year ago to today, they've all had to increase their projections for demand for the next 5 years. It's amazing how quickly this increased level of demand has manifested itself. So I do think we're getting more and more agreement across the utility sector about these reliability concerns that we've been voicing for quite some time now.
I wanted to follow up. You talked about kind of the all or none mindset. It seems like it's got some other areas of the discussion it's impacting. It feels like when the reliability topic comes up, there's almost I think this is becoming increasingly a minority. It's kind of the boy who cried wolf. It's like status quo is going to work out just fine. We're adding enough intermittent generation and batteries to take care of it. The second would be voice seems to be we need more baseload generation. I think that's where a lot of this discussion. So that would really be gas and longer term nuclear, it would seem. The third voice seems to be more of demand management, virtual power plants, getting more out of the current grid. That discussion has felt. I haven't seen. I guess it's been a little too arm wavy for me. But what as you guys think about ways technology can help us more actively manage the demand side, what is your view of that approach?
Well, you framed it well, quite frankly. Again, to repeat what I've said 2 or 3 times, getting away from the all or none conversation. There's a whole set of tools in the toolbox, and that third set of options you mentioned, yes, those are really important tools for the utility sector to look at in terms of demand side resources and demand side management and battery storage and perhaps even reconductoring of electric transmission lines to increase their carrying capacity. There's this range of options we have out here to try to maintain reliability in an effective way. So it's not all about making sure we have enough of this always available or dispatchable generation. I still think that's the most important issue. There are this other range of things that we also need to be smart about as a country and invest in. It's going to increase our reliability and our resilience. No question about it. So again, I applaud anyone that wants to have a longer conversation about this as opposed to the 30-second soundbite, because that's where we got caught up in these too simple answers in terms of describing all the good ways we can try to address this reliability challenge.
Jim, do you think it's, I'm always really curious to know what, if you could get in a Washington, elite conversation in Washington. Put some of the most powerful people in the room in Washington. And if you said, hey team, you guys probably know this, but power use is going up. Hey team, you may know this, power prices are going up. Hey team, I don't know if you know this, but this inflation thing is kind of difficult and a problem. And hey team, it's hard as heck to build stuff in the US. So like that basic picture of like, we're using more power prices are going up, inflation is a problem, it's hard to build stuff. If I was standing in the Oval Office with Washington's 10 most powerful people, would they know that? Or would they say, and then squabble, or would they debate some of that?
Look, I think that there's a growing awareness across those issues. I'd add one more to that list, and that is the electric sector is going to be a key player if you want to make carbon reductions happen across our economy. That's the other piece of this equation. But I do think that there is some general awareness of those issues. Building consensus around it is easier said than done. But I will offer one area where at least there's more conversation in a bipartisan way than there used to be. And that is if we can revise and simplify and make more predictable and streamlined the permitting and siting process for this country through the National Environmental Policy Act. Now, historically, that was always industry wants it looser and everyone else and the environmentalists say we don't want to make it looser. But now that it's really hard to build a solar plant or a wind farm, there's more of an awareness across the ideological spectrum that, it really is hard to get these things permitted. And maybe there is something we can do to make this where it's more predictable in terms of a process and it works in a more efficient way. I'm not saying we're there yet. Don't overinterpret what I'm saying to you right now. But I've seen a greater consensus on that specific issue about acknowledging how tough it is to get something built in this country than I've seen in the past. We need to move a long way to make something actually happen here. Don't get me wrong. But I do think that awareness is growing, maybe slower than we'd all like, but I do think that's happening.
So Jim, what's been since this legislation came out, I noticed you've been on some other news programs. Mm-hmm. Your phone is ringing. What would you tell us about kind of the rest of the country and awareness of these issues and the amount of pull you're feeling from places like, hey, come explain this to us? Like what's happening out there? You said awareness is growing in Washington, D.C. Is it also growing in the rest of the country? What do you feel?
Well, I think we're getting a lot more attention is being given to these issues about growing electric demand with data centers and AI and Bitcoin and electrification. I'm seeing a lot more attention being given that by news outlets across to the extent news outlets occupy an ideological spectrum. I think there's a lot greater acknowledgement today than there was, let's say, 12 months ago. So I'm seeing a greater awareness in that context. I'm not going to lie to you, though, when it comes to the intricacies of an EPA rule, that's really a DC insider, policy wonkish type conversation. But I do think there's a general awareness across the country about the importance of how we meet this future demand. I can just tell you one quick example was last January when we had a significant cold snap in most of the lower 48 states, but in the Pacific Northwest, where Bonneville Power has 1,250 megawatts of wind generation, you had 1,250 megawatts of electricity coming out until it got cold. And then it dropped down to less than 100. The wind stopped blowing when it got really cold. But the dams were able to ramp up and meet that need and get it fixed and at least address the demand. And so that got a lot of attention in the Northwest about the value of those dams, because right before that happened, a secret agreement was cut between the Biden administration and a few of the litigants in wanting to tear down 4 of the dams on the lower Snake River. And I know that's a regional issue and most people across the country aren't familiar with that, but it's a great example of where public policy is going in the wrong direction when you tear down 3,000 megawatts of carbon-free generation on this height, tear it down. And at the same time, just within a couple of weeks after they announced that, the dams saved the day because they're that always available resource. So I'm seeing more and more of this, but look, I'm pretty close to the flame. This is what I work on every day. And I talk to other utilities around the country every day. So that's not representative of the public at large, but I do feel, in all honesty, I see greater awareness of this issue. We got to keep pounding the table on it, because I'll tell you one thing, and I don't care what anyone's politics are. If the lights don't go on when people flip the switch, nobody's going to be happy.
Well, that's what I was going to ask you. We as Americans are painfully aware this is an election year, and so we're going to go through a family feud, I guess you'd call it. What do you think the election will do to these issues? Will somebody ask about these issues? Will they enter the political discussion? Is there a chance that the election could make these issues better because we have to talk about them? What do you think?
Well, since I work on energy every day, as much as I'd like to think this is going to be one of the top issues in the political season, I'm not sure it is, to be candid. I think there may be other issues that occupy more of the echo chamber for the election year. That being said, though, I do think that conversations about how we can move ahead as a country in terms of getting things sited and built and being productive to help our economy grow, I'd like to think that that's something where everyone would want to have a seat at the table to talk about that. Before maybe when you get in the specifics, you're going to have more disagreements. So I'd like to think that people want this country to have success in terms of investing in itself and building a capacity in terms of whether it's these new chip plants that are being produced, whether it's new data centers. We don't want that to go to the rest of the world. We want that built here. And so I am hoping that in that context, it's more of a conversation in this election season. But, and then there's 6 months to go, and who knows what's going to be discussed in the next 6 months before the election. But I think if you frame it that way, I think it's how a lot of people relate to it in terms of what it means in terms of our economy and growth in the future. I think that's where you get people's attention.
Well, it used to be what they called a pocketbook issue. It is a pocketbook issue, and those used to matter a lot. One more for me, Jeff, get back in here. Natural gas. This seems to be the why do we keep fighting about this fuel?
Yeah.
It isn't perfect, but gosh darn it, when you're solving for a gazillion things, it's an amazing fuel. Do you see any hope that we're going to stop fighting at some point about natural gas and just embrace it?
Well, I think when you look at it as a fuel for making electricity, there are a number of qualities associated with natural gas that make it really valuable in the electric sector. Number one, the turbines are so efficient now. It's amazing how many kilowatt hours you get per unit of gas now compared to what it used to be. So it's an incredibly efficient way to make electricity. It's an area where gas has a lot of flexibility. You can build plants that only run during peak times. So, 800, 1,000 hours a year. You can build plants that run base load on gas that run 8,000 hours a year. So gas gives you this capacity to meet different operational challenges that other fuels don't always give you, to have that peaking resource. If you run a coal plant, you need to run it all the time. Gas, you can turn on and off. And I know that sounds kind of really elementary to describe it that way, but I view gas as a really critical tool in terms of the flexibility it gives to manage all the changing dynamics in the electric sector today. To me, gas is a key fuel. And as I mentioned a few minutes ago, in that context, we've got to have a conversation as a country about making sure we have adequate gas pipeline carrying capacity to meet our electric needs, let alone all the other needs of natural gas in this country. That's an important infrastructure investment we've got to be talking about as a country, because I view gas as a critical fuel in terms of electric reliability today, but also going forward in the future. There's just no question about it based on all the characteristics I just described.
Well, I'll ask one question. I know Maynard will have us end on a positive note, but one of my worries is, this is a really complex subject.
Yeah.
We seem to be driving towards a ditch, but there is, versus the NRECA warning that cold weather may drive out outages. My worry is that we're going to have to hit a wall, or we're going to have to. We had the outage widespread here in Texas, or we're going to have bad things happen more broadly before. And then we're going to be reactionary, and then it's going to take a while to fix.
Yeah.
So What road signs are you watching for to say that, hey, maybe we're just going to drive close to the ditch. We're not going to drive all the way in.
Well, I'm with you. I don't wish that on our country, to have really bad circumstances and serious outages. That obviously would be bad for anyone involved. I will say that while it may not have created a massive shift in the national conversation since the incident in Texas, there's been a lot of investments in Texas to weatherize the system, make it more resilient, make it more reliable. Same thing with those 9 states in the Mid-Atlantic area. The Tennessee Valley Authority, or TVA, was one of the big providers there. They've made a lot of investments to increase reliability and resilience. So on one-offs, those particular circumstances have created action and reaction to try to build in greater resilience for those cold weather circumstances. The challenge in the longer run is it comes back to something I may have mentioned a few minutes ago, and that is for investing in new infrastructure in this sector, it's not something you can do quickly. It doesn't happen in a few months. It takes time. And so if we get in that, and you appropriately said it, where we're just reacting, man, that's a tough spot to be when you're in our business, where even if you react, it takes a few years before your reaction results in something. So we're going to keep pounding the pavement and talking about this issue and raising these concerns. I think more of the utility sector is coming together. And quite frankly, at this point, a lot of the big tech companies that use these data centers are also joining in now in this conversation. So I see momentum building in terms of electric demand is growing, and we don't have a clear path for how we're going to meet it. And we got to come together and figure this out. And finally, from a national security standpoint, do we want these data centers in the United States of America, or do we want them offshore? And I think that's got the attention of a lot of policymakers in Washington as well. So to me, and I don't like to end on a negative note either. I think from the positive standpoint, I think the conversation is building momentum. I think there's a lot more awareness across, not just right within the electric sector. And that's a good first few steps to take. We got a long way to go, but I think we're going in a good direction.
Jim and Jeff, I don't know if this qualifies as ending on a positive note, but maybe I'll ask a question that it might be, which is, you think about, well, for some reason, just listening to you guys and following along today, when Eisenhower built the highway system, it was, I think, the formal name of the Interstate Highway and Defense System. Yeah. And part of his mentality was, yeah, we need this for all these reasons, but we got to move goods around in wartime. This is a defense thing. You see a lot about cybersecurity, potentially bringing down power systems, and that's a threat to the country. We've already talked about some of the threats or missed opportunities at a minimum that we could have here. Is there a national security push that could change this, where whoever is president or whoever is speaking for this says, in the interests of the nation's national security, we are going to override some of this NEPA stuff. We are going to change some of this NEPA stuff. We are going to build more. We're going to build those pipelines. We're going to put in those nuclear plants, those natural gas plants. Is that on the horizon, that we could see that speech or that movement or that legislation?
Well, I'd like to think that is a conversation that's ripe to happen. I'm not going to tell you it's going to happen tomorrow, but I do think that when you look at how this country functions on a day-to-day basis, reliable power is something everyone takes for granted, and we don't want to put that at risk. And you overlay it with we're growing even greater reliance on electricity as we digitize more things, as we electrify more things. It becomes all the more integrated into every way this country functions. So I'd like to think we could have that conversation. And since you mentioned cybersecurity, I do want to say this. The electric sector has, for over a decade now, we have actually, there's federal standards and regulations for cybersecurity protections in the electric sector. No other sector of the economy has that. The electric sector works with the Department of Homeland Security, Department of Energy on a really organized way collectively. And that's the investor owns, the municipals, and the co-ops on cybersecurity. So if you do want some good news, and that doesn't mean the risk is gone, cybersecurity is an inherent risk. But I can tell you, as a sector, the electric sector has done a really good job of working with our government partners to try to do the best we can to mitigate those risks. But beyond that, I'm all in on that national security conversation that you just articulated. I'd love to hear that said by candidates of both parties. I don't think it's a partisan issue. I think we should all be on the same page on this one in terms of wanting to secure a reliable and affordable electric supply for this country.
Well, Jim, thanks for all you're doing. And all the best to all your member co-ops and those 42 plus million people that are getting power. If they see this, we appreciate you and we appreciate them.
Okay, I appreciate the opportunity. Let's keep the conversation going.
Thank you, Jim. Thanks, everybody.